When we speak about digitalization, of course, we think about our everyday life. We see that digitalization is completely changing the world as we know it. It is changing the way we travel with TripAdvisor, the way we take a taxi. We speak about Uber, the way we eat, the way we watch movies, the way we listen to music. Probably for some of you, the way you date as well, but this is not of our business, and I'm not looking at anyone in the audience. But the same goes for insurance. The new technologies are today affecting insurance, pretty much all the different steps in the insurance value chain. Mostly distribution today, but tomorrow we expect also new technologies to affect product developments or claims management, for instance, more and more. More and more of our consumers also are connected. This is absolutely very clear. We see also the behaviors and the expectations of insurance consumers changing. And this has consequences. The first one on the insurance undertakings themselves. They need to adapt. Insurance companies need to adapt to meet the new needs of the connected insurance consumers. And to this end, insurance companies have to integrate new technologies in their internal processes to make them more effective, more efficient, to make also the purchasing process, the sale process, more convenient for consumers, considering that the preferred option of consumers when it comes to digitalization is the small smartphone screen, not the laptop, but really the small smartphone screen. It is also pushing insurance companies to develop new types of services, new types of products, trying to make them more tailored, more personalized for the need of the insurance consumers. And the second effect that we see is also the emergence of new actors on the market, the insurtech startups that were mentioned before. Insurtech startups, they're widespread now on the market, mostly small and medium-sized undertakings. Again, mostly looking at distribution aspects today, but this is expected to change in the future. And the interesting bit is that we see different types of relationship between insurtech startups, on the one hand, and the traditional insurance companies. This goes from competing with each other, but the most likely scenario is actually partnership. Cooperation between the insurtech startups and the traditional insurance companies. We see also some insurance companies investing into the startups. We see some insurers taking over startups, and we start seeing the opposite trends. So last year in the US, we saw a startup taking over a traditional insurance company, which means something. Then the third consequence of this digital mania of the insurance sector is on supervisory and regulatory authorities, because they also need to adapt to the new trends. And these supervisors and regulators are now facing a huge challenge, which is how to support innovation in the insurance sector in a digital era, while maintaining the level playing field between the different actors, and at the same time, maintaining a high level of consumer protection. Because I heard about positive business framework, but what we need is a positive business and consumer framework in the era of digitalization. And what we did as Insurance Europe, the federation I work for, is to develop a set of recommendations to supervisors and regulators to help them address this challenge of supporting innovation in a digital era. And I have 4 recommendations to present to you. Just looking at the chair, I know you're going to be extremely tough with the timing. If you see at one point that I'm going beyond, just let me know. I've got an excuse. This is always the excuse I'm using during panels, is that I'm French. So I'm living at a different time span, and for me, minutes mean something different than for especially German nationals. So the first recommendation is to make the regulatory framework digital friendly. If you want innovation in the market, you need to make sure that the regulatory framework doesn't hinder innovation. You need to make sure that rules are conducive to innovation. And the question I have is Is it the case today when we look at the European regulatory framework? My answer to this question is no, and I'm going to provide you with two examples. And these two examples relate to a very, very specific example, which is disclosures. A consumer wishing to buy a unit-linked life insurance contract online. So really the typical digital context. And this consumer is going to be faced with two challenges. The first one is the amount of information he is going to receive. Because today, according to European regulation framework, this consumer who is willing to purchase a unit-linked life insurance contract is going to be provided with a minimum of 161 disclosure at pre-contractual stage. And of course, when a consumer is going online, what is it that he wants? He wants to be able to compare the different offers online, and he wants a purchasing process which is simple, easy to understand, and quick. And my question is, how does it allow for a purchasing process to be simple to understand, easy, and quick? How does it allow a consumer to compare the different offers online, especially on the screen of a smartphone? The second obstacle that my consumer is going to meet relates to the format of the disclosures. I think you've all heard about the key ID, the key information document that insurance distributors will have to use as from the 1st of January next year. It is a standardized format which is supposed to answer to the key questions that a consumer may have before purchasing a retail investment product, including unit-linked life insurance product, for instance. So this is a document which is supposed to help the consumer to compare the different offers. The problem with this format is that, according to European regulation, it has to be provided on paper as a default option. On paper. This is what the PRIPS regulation is saying. How digital friendly is this? The only way for this disclosure format to be provided through digital means is to meet additional conditions and strict conditions. The second problem with this disclosure format is that when you test it in real life, it is actually more than 5 page long. 5 pages A4 format long. Again, my question, how does it fit with a smartphone screen? And then third, as I said before, on top of this KID, the insurance distributor will have to provide additional disclosure to the consumer, stemming from the Solvency II directive, from the insurance distribution directive, and regulation from the e-commerce directive and the distance marketing directive. Again, my question, how digital friendly is that? Well, the point I have is that all these different requirements, which are far from being future-proof, are simply making the selling process less convenient, more burdensome, and lengthier to the detriment of the consumer. So it is actually preventing insurers and distributors from meeting the demands and the expectations of consumers in a digital world. And from my point of view, this is even more of a shame that we know it is possible to design disclosure format in a way that is consumer-friendly and digital-friendly. We, as Insurance Europe, did it. We did it for different types of products, for non-life products. We developed a disclosure format, also for pre-contractual stage, which is called the Insurance Product Information Document. And it is consumer-friendly because it is using icons, and it is using also Q&A formats, which is really engaging for consumers. And it is digital-friendly because you see the icons, for instance, are allowing the consumer to print the document, to download it, or to share it through social medias or emails. It is also taking a layered approach, which is really convenient based on experience for consumers. It means that you can keep the main disclosure format short, straight to the point, to allow for comparison. But if consumers wish so, they can click on a small icon and get access to further information. So this is really a digital convenient solution. And then, of course, what we proposed is also responsive format, which means a format which is adapted to different types of support, paper, but also the different types of screens that you can imagine in a digital world, laptop, computers, tablets, and smartphones. And we're actually quite happy that the format that we developed actually has given some inspiration to both EIOPA and the European Commission, who came up with their insurance product information document, which is taking inspiration from some of these features. And this IPIT is going to come into the market pretty soon, together with the Insurance Distribution Directive. So, of course, the design is different, because EIOPA and the Commission have chosen a different set of design, but still they're allowing, for instance, for a layered approach to the information, which is a positive step. Okay. So, if you want to have rules that are fit for digitalization, the recommendation from Insurance Europe is not to add new rules, but really to review the existing ones and to make sure that they are tech neutral and future-proof. From a disclosure perspective, it means avoiding overload and duplication, removing paper requirements. It also means trying to be as less prescriptive as possible to make sure that the rules are fit for the future. If you, as a regulator or supervisor, want to develop a disclosure format, please involve in the design IT digital experts, involve also behavioral economics experts to make sure it is digital friendly and consumer friendly. And please test your format with the final consumers, both the digital savvy ones, but also the other ones who still have a preference for face-to-face interactions or for paper interactions. The second recommendation that we have as Insurance Europe is for regulators and supervisors to support digital innovation. And we know already a number of supervisory authorities across Europe and even across the world have set up some initiatives to try and support operators to test their ideas, to see whether their ideas were fitting the existing regulatory framework. We have, for instance, in some countries, advice units, coaching, but also regulatory sandboxes. So a wide variety of different tools to help the industry. This is all fine for us. The most important is, of course, that these tools are accessible and available to all the different players on the market. Startups, like traditional companies. This is a question of level playing field, competition, and of course, the opposite would be discriminatory. Then the third recommendation is, taking into account all these different initiatives at national level, we feel there is a big need for supervisory authorities to exchange information, experience about the different tools they've put into place. And this could be done through a new forum or through EIOPA, for instance. They could have a role to invite supervisors to gain a better understanding of what's going on in the other markets. And also to assess the impact of these different tools, not only on operators on the market, but also on consumers, the risks and benefits. The point which is really important also is clarify the role of the supervisory authorities. And here I'm thinking especially about the insurance one versus the data protection one. Today I see at European level both EIOPA on the one hand and the Data Protection Authority working separately on the issue of big data, which means that there is a risk that they come up with a different understanding of big data on insurance and on consumers, and they come up with different proposals on how to regulate maybe big data. In the best case, these proposals could be overlapping or duplicative, but in the worst case, they can be inconsistent and contradictory, which would be absolutely unacceptable. So yes to cooperation and coordination between the different supervisory authorities. And finally, today, from a supervisory perspective, there's absolutely nothing preventing one startup to be qualified as an insurance or an intermediary in one market, and thus being regulated by Solvency II and the IDD, while in another market, the same startup could fall into the regulatory sandbox and then benefit from relaxed application of rules. And yet, in a third market, the same startup company could be qualified as not being an insurance company or an intermediary, and then not being regulated by the insurance regulation, leaving thus consumers unprotected. And again, this is something that would need to be addressed, if not at international level, at least at European level, to ensure more consistent approach. Last but not least, of course, consumer protection. This is a fourth and final recommendation from Insurance Europe to regulators and supervisors. If you want to have consumer trust in digital innovation, you need to make sure that consumers can be confident that they will benefit from the same rights and protection whoever they buy their products from, a startup or a traditional insurance company or insurance intermediary. That means activity-based supervision. If one startup is doing insurance business, they need to be compliant with Solvency II rules. If they sell insurance, they need to be compliant with the IDD, with the GDPR, level 1, level 2, but also the supervisory rules, guidelines. This is for the sake of consumer protection. It also means, it's not 2 but 3, that supervisory authorities need to carry out a vigilant monitoring of the compliance of all actors on the market with the regulatory framework, startups and insurance companies. So just to wrap up, and this is the end for me, first recommendation, make rules fit for digitalization and remove paper-based requirements. This is a minimum. Second, support digital innovation, but when you set up tools, make sure that these tools are open to all actors on the market, startups and traditional actors alike. Ensure a more consistent approach, right? And ensure also coordination between the different types of supervisory authorities, insurance and data protection. And fourth, secure consumer trust by ensuring activity-based supervision. Voilà, this is the end of my presentation. I hope I managed in terms of time. Hardly, but yes, 2 minutes too much. I'm of course very happy to take any questions you may have, and if the chairs allow, of course. Thank you very much.